All right, welcome to The Explainer. Today, we're diving into a really interesting analysis of the precious metals market, one that makes a case for a massive price surge in gold and silver, but also comes with a surprising warning about why you might get locked out of it. Okay, first things first, let's get into the numbers that have everyone talking. I mean, the recent performance of precious metals, to say it's been explosive, well, that might be an understatement. And this chart really just lays it all out, doesn't it? Take a look. Over the last year, silver's price has just skyrocketed. We're talking up almost 200%. And gold, also a massive 71% gain. I mean, they're both absolutely crushing the S&P 500, even in what's been a really strong year for the stock market. So you see numbers like that, and you have to ask, right? Is this the top? Are we just seeing a repeat of that 2011 blow-off top? You know, that last crazy spike before everything came crashing down? Well, according to this analysis, the answer is a pretty firm no. And it's because today's market is a completely different animal. And this slide really breaks down those key differences. Think back to 2011, you had this high level of global cooperation, everyone kind of working together to fix the financial system. Today, it's a much more fractured world. But the real kicker, the biggest difference, is interest rates here in the US. Right now, they're falling. And that's huge because in the past, those big peaks for metals have always come after interest rates have already hit their bottom. So what's the takeaway here? It means we're not at the peak, not even close. The analogy used in this analysis is that we're basically in a 2006 or 2007 phase. We're still kind of in the early innings of a major bull run. And that means the biggest, most dramatic price moves in US dollar terms, well, they're still ahead of us. Okay, so if the biggest moves are still to come, that's the million-dollar question, isn't it? How high could prices actually go? Well, this analysis puts forward a really fascinating theory, and it all comes down to looking at what's already been happening outside the US. The idea is called foreign currency benchmarking, and it's pretty simple, actually. The core theory is that in places like Australia, Canada, and Japan, gold and silver have already experienced much bigger gains since that 2011 peak. So the US market? It's really just playing catch-up to the rest of the world. And wow, this table really just puts it in black and white, doesn't it? You can see the difference so clearly. I mean, since 2011, yeah, gold is up a lot in US dollars. But look at how much more it's up in these other currencies. And then you look at silver. The difference is just staggering. We're talking gains of over 200% in some of these other countries. So let's follow that logic. If the US dollar price is just playing catch up, and if that gap closes, well, this analysis projects that gold could reach a price target of $7,500 an ounce. And if you thought that was something, just apply that same logic to silver. The projection here is even more stunning, a potential move to over $150 an ounce. But just when this whole case for a massive bull market seems unstoppable, the analysis throws a major curveball, a huge warning really, and it's that you might not actually be able to get in on the action. And this is a pretty shocking claim coming from Taylor Kenny, who's a precious metals dealer. She's saying that banks are actively stopping their clients from buying physical gold and silver, that they're no longer allowing the wires to go through. Essentially, they want to keep you and your money trapped in the traditional fiat system.
So here's the alleged contradiction, the real kicker. The argument is that the big banks themselves are betting big on precious metals, while at the exact same time, they're discouraging their own customers from doing the very same thing. They're trying to keep the public out.
And according to this source, this isn't some random coincidence. It's a deliberate three-step playbook. Step 1, you see the media start to discourage you. Step 2, the banks start blocking the actual transactions. And the final step, the end game, punitive taxation. And that's really the final nail in the coffin for the average person. Think about it. In Europe, they have this tax called a VAT, a value-added tax. On silver, it can be 20% or even higher. If a similar tax were introduced in the US, it would make buying physical metals so expensive that most people couldn't even consider it. It would price them right out of the market. So what's the big takeaway from all this? On one hand, you have this incredibly compelling case for a massive bull market in gold and silver. But on the other hand, you have this really serious warning that the window of opportunity, the door to get in, is closing, and fast. The barrier to entry, it seems, won't be some official law. It'll simply be price and taxation. And that leaves us with a pretty heavy final question to think about. Who's going to be left on the outside looking in?